Hello traders, welcome back to a new episode. In this video, we will dive into a profitable trading strategy using TradingView indicators. Before we begin, I would appreciate it if you like the video so that you can help me continue spreading this trading knowledge. And if you are not subscribed, I recommend you subscribe and activate the bell so you don't miss any videos. This trading strategy is based on two indicators, the SSL Hybrid and QQE Mod. Both indicators can be found for free on TradingView. If you don't have an account, use the link in the description to register on TradingView. To apply these two indicators or the chart, go the indicators, search for SSL Hybrid, apply this by Mickle00. Search for QQE Mod and apply this. Now we see the two indicators on the chart. The SSL Schaff Trend Cycle Hybrid indicator is a technical analysis tool used to identify trends and potential trend reversals in financial markets. The SSL Hybrid indicator combines elements of the SSL channel and the SSL fast, slow indicators to provide more robust signals about trend direction and strength. It aims to filter out market noise and provide clearer signals for traders. The SSL Hybrid indicator aims to provide traders with clear signals about trend changes and potential entry or exit points in the market. However, like any technical analysis tool, it's important to use the SSL Hybrid in conjunction with other indicators and analysis techniques to make well-informed trading decisions. That's why we will combine this indicator with the QQE Mod indicator. The QQE Mod stands for Quantitative Qualitative Estimation Modified. This indicator is a technical analysis tool used in financial markets, primarily in forex and stocks trading. It is a modified version of the original QQE indicator, which stands for Quantitative Qualitative Estimation. The QQE Mod indicator is designed to help traders identify trends and potential reversals in price movements. It combines elements of two other popular indicators, the Relative Strength Index, well known as RSI, and the Moving Average Convergence Divergence, also known as MACD. The QQE Mod attempts to smooth out market noise and provide clearer signals by using a combination of moving averages and smoothed RSI values. Here's a brief overview of how the QQE Mod indicator works. Trigger line is the difference between the EMA of RSI and its signal line is plotted as the trigger line. This indicator generates crossing signals. Buy and sell signals are generated based on the crossings of the trigger line. When the trigger line crosses above the zero line, it indicates a potential buy signal. Conversely, when it crosses below the zero line, it indicates a potential sell signal. The QQE Mod indicator aims to provide traders with clear signals about trend changes and potential entry or exit points in the market. Trading strategy. Now that you know how these two indicators work, let's jump to our trading strategy. This trading strategy can be used for any markets and any time frame. Buying rules. For buy entry, follow these steps. 1. The QQE histogram is shifts to blue or it's above the zero line, which indicates bullish momentum or uptrend market. 2. A strong bullish candle crosses the SSL line to the upside and the SSL turns blue. 3. Before you place a buy order, see if the buy arrow signal has been formed in one of the previous 4 candles from the entry candle. 4. Buy after the close of this strong bullish candle that crosses the SSL line. Place your stop loss a few pips below the entry candle or in the previous swing low. Use 1:2 or above risk-reward ratio for your take profit, or use the previous swing high as your profit target. Selling rules. For sell entry, follow these steps. 1. The QQE histogram is shifts to red or it's below the zero line, which indicates bearish momentum or downtrend market. 2. A strong bearish candle crosses the SSL line to the downside and the SSL turns red. 3. Before you place a sell order, see if the sell arrow signal has been formed in one of the previous 4 candles from the entry candle. 4. Sell after the close of this strong bearish candle that crosses the SSL line. Place your stop loss a few pips above the entry candle or in the previous swing high. Use 1:2 or above risk-reward ratio for your take profit, or use the previous swing low as your profit target. Let's see some examples. We hope you enjoyed this video and found it useful. Make sure to practice and understand the strategy before applying it in real trading. And most importantly, since trading involves risk and can lead to losses, always follow strict risk management rules. By doing this, you will increase your chances of becoming a successful trader. Thanks for watching, and good luck!